Retail industry right now is dealing with something known as shrink, which is basically theft or a loss of inventory that wasn't due to actually selling it. It has taken a big bite out of some major retailers, with the cost to a giant like Target now totaling more than $1 billion. It's on the rise. It tends to go that way when we are in an inflationary environment, but that's not the only issue. Let's bring in Ed Yruma. He is the managing director and senior research analyst at Piper Sandler, who looked in detail about shrink and what it means for a lot of these retailers. Ed, thanks so much for being with us. Let's just spell out what exactly is the problem, because on earnings calls, we're hearing more and more about that.
Well, it's complicated, right? You have organized theft rings that are going and stealing items. You have, companies that are making the decision not to interact, not to stop the thefts that are happening. And then you also have some changes in local states, municipalities that are changing the thresholds at which these become felonies. And so I think it's kind of the confluence of all of that, plus the inflationary pressures that you mentioned, that are giving rise to this unprecedented rash in retail theft.
I want to talk about that organized nature. We were showing video of people literally pretty brazenly walking out with cartfuls of things. And, I think about this Lululemon story where they ultimately let employees go for going after the thieves. It is becoming company policy that you don't put your employees in harm's way when this is going on, which I guess does protect the employees, but where does that leave the companies in terms of recourse?
Well, it's a very complicated question, right? I think the companies don't want to put the employees in a dangerous situation, right? They aren't trained law enforcement. I think the other piece is they don't want to escalate the situation for other customers that might be in the store. They don't want to create a dangerous environment. But then, unfortunately, the inadvertent byproduct of that is, I think, this brazenness by which you're seeing some of these criminals come and take these items. And I think it's something that the retailers are really struggling with right now. Like, what's the right balance between creating a safe environment for your employees, your customers, but then also trying to mitigate, this continued pressure, on their financial results.
And experience is so important, right? When you're walking into a store, you don't want to be viewed as a criminal. And so if you're going to start doing spontaneous bag checks or put guards at the door, that kind of changes the environment. What measures have you seen that seem effective by some of these retailers?
We've seen more, we call them kind of passive theft deterrence, right? So it might be locking up an item. It might be putting that toothpaste or toothbrush behind kind of this locked area. It might require more employee assistance. They're changing sight lines, right? So, historically, retailers would have little areas in a store where you could get lost and explore. They're changing it so sight lines are better, which allow employees to see through the full store. So it's kind of the combination of all these things that are helping to hopefully deter some of the theft.
This sounds like it's inflationary, right? At some point, these businesses have to make up for what they lost. So now a lipstick, they'll charge one lipstick, as if it's two, right? Because they're losing perhaps one.
Yeah, it certainly doesn't help in this environment. The retailers will get compensated for this, and the cost is going to be borne by all the customers. So they're certainly, not yet talking about taking a price in relation to this, but I think that's the inevitable outcome should these thefts continue.
Is there an insurance product against this?
There isn't, but we're seeing more retailers use technology. RFID in particular can be successful. We're also seeing them try to clamp down on where these products are resold, right? I think that's the other piece of the equation that's changed. Historically, if you stole items, right, you have to get compensated for that, and it was difficult to resell these items. But with the advent of these large marketplaces like Amazon, like eBay, it's easy to move some of these goods. So I think you're seeing them now with things like the Inform Act clamp down on how these products are resold.
You rate stock, so this is not the only thing you look at. And to what extent is this bringing down earnings estimates? Has it already been factored in, or do you think there's still some perhaps downside to go from this particular phenomenon?
At this juncture, it does look like earnings are relatively that the current earnings estimates, broadly speaking, reflect this. There was a big step up kind of middle of last year. And so companies have now put that into their guidance and their forecast. So it's hard to say that there's incremental downside pressure on this specific line item, but it's clearly something that has to be rectified because it is weighing on all of these companies' results.
You've got a buy on Target, which has really struggled recently, not just with shrink, but with other issues. What's the thesis behind your outperform?
I think a big part of our thesis, and we've started to like Target, because we see signs of this turn happening. They clearly got way over their skis. So on the inventory perspective, in the back half of last year, they were clearly tilted to the highly discretionary items, which is tough in this current environment. And so over the past couple of quarters, you've seen them bring down inventory levels. You've seen them kind of push away from some of these highly discretionary items into more items that people need. And we think over time, the margins will start to rebuild.
On a day where we got signs that job growth in the United States is lackluster, revisions of job growth now down 5 months in a row, how are you viewing the buying opportunities in the consumer space right now? I know that you don't have a lot of buys out there. You are being selective. Why is that?
Look, I think uncertainty is kind of the name of the game right now, right? The consumer has remained, surprisingly robust, right, and continues to spend. But I think we're watching very closely all these things you talked about. We're looking at, excess savings, which are becoming depleted. We're looking at the resumption of student loan repayments. And you're starting to see unemployment begin to, potentially tick up. So I think the confluence of all that would tell you that the consumer should weaken. Have we seen it yet? In kind of idiosyncratically we have, but not broad-based. But I think that's kind of lending to this caution that we have around some of these stocks in the medium term.